that I wanted to kind of do that, obviously just to kind of recap a little bit, we went over some real basic fundamentals of the strategy. Those were all slides. We had a few visuals. I wanted to provide the video to show, this is kind of how we navigate the tape. Right? We talk to ourselves. We're talking ourselves in and out of trades. But as you could see, as soon as I got involved, my primary objective was getting risk out. That's the only thing that matters. Once that occurs, remember, that's the hardest part of this. Once that occurs, we can just let price develop, right? Some of you guys are talking about, hey, I would be sliding a stop here. I would hit the flatten button here, right? We were able to avoid, and I'm talking about the one loss that we took, we were able to avoid taking a bath on that trade. We actually could have got out even, but we took a minus 4.25 or 4.5, whatever it was, but we were still willing to take that same setup. And, I did kind of scream out in the room that this was a trick trade, right? So that's a little too advanced for this class where we are specifically, but it's simply based on persistence beats resistance and an inflection point. And so when you guys get in the room with me next week, we'll probably get involved in some of those trades. That was a pure scalp. That's for those that, might be raising their hand saying, hey, it's all well and good to do this, but I have a full-time job. I want to just scalp a few of those trades in the morning before I go to work. That's kind of how we have it set up. Okay, so that provided a very good visual for you guys. I'm really glad that came through good, and the resolution was good, and that you all agreed. And yes, I will be doing more of that stuff. But I wanted to obviously provide that practical application. So now what we're going to do is we're going to go through a chart. Okay, you guys just saw the real-time stuff. We've got to do, obviously, and this is the homework aspect of this strategy. You got to go back and do this stuff. But what we're going to do is we're going to walk through a chart, and we're going to point out price action related to the levels. Then we're going to apply trades to that price action. Okay, and then we're going to see how we've done. Give me 1 second and make sure we're queued up good here. Oh, we're not doing that yet. Sorry. We're not going to do that yet. We're going to talk about reading the tape. That's coming up. I'm just kind of getting ahead of myself. So what we're going to talk about now is reading the tape. We're going to talk about what exactly we're trying to accomplish here. So again, my strategy, this strategy is based on the 100 handle block of the NQ. Every one of my levels, spots and markers, repeat themselves for every 100 handles. That's why I say the 69.12 acts just like the 68.12, just like the 67.12, just like the 70.12. That's and by the way, before anybody asks, the spots and markers never change. So these aren't moving targets. These are not, levels that we have to formulate on a daily basis, weekly basis, and add to our chart. This simply repeats itself over and over and over again. I got to keep it simple, right? That's the whole point of this. Trading should be simple. It's not easy, but it is simple, right? And we tend to make it difficult, us as humans. So in identifying the 100 handle block as to kind of where our battlefield, if you will, we've got all of our levels, throughout the block. We're now, with this expanded volatility, we're identifying levels that, if held, we tend to seek the next level. So the way that we're traveling through this 100 handle block at the moment is just like this. From the roundy, we'll go get a 12. Now, we know there's an 06 spot in there, right? So applying a trade to that can be a number of different ways. The bottom line is, if that 12 holds, we're headed to the 33. Now, we're going to get into the 33 here in a minute. And I think I saw a question about 33. It's not a 6. It's not an 8. Why is that even talked about? We're going to talk about that in 1 second. We know if that 33 holds, we're going to head to an inflection point of the 50. We went from roundy to 50. In order for us to go to the roundy and fulfill the entire 100 handle block, we've got to get through that 62 marker. Once we're through that, we tend to head to the 88, and then the 88 is too close to the roundy not to go get it. So there is rules applied to every spot and marker in between this in order to get there. These, I wanted to kind of give this to you guys. This is an absolute addition to the class, an updated portion of the class. I mean, there are several updates, obviously, but this one's key. I want you guys to really key in on these levels. I would even put these on a Post-it and mark it down. They will travel backwards the same way. So I'm going to show you guys a visual right now. And this is just a normal RTH day, okay? This is from Globex. This is the market open right here, this 6:30. Remember, I'm on the West Coast. So I'm going to show you how we go from roundy to roundy. There's our roundy. There's that 12. We know if the 12 is good, where are we headed? 33. Well, hey, if that 33 is good, we got a good chance at getting the 50. In order to get to the roundy from here and convert the 50, we got to get and stay above this 62. Notice how it's resistance. That has potential fail written all over it, okay? And if we were to take a counter trend trade here, we would have got risk out, stop out, okay? And I'll show you guys how to apply a trade here if you took the other side of it. But if you're, if you have the patience of a monk, as I like to say, if you're truly Zen, you stay in this stuff. It just keeps capturing these levels. Remember, the long would have been probably down in here in this 26 against the 22 to seek the 33. There's our 88. So we go roundy, 12, 33, 50, no rejection. We head to the 62, we break that. That opens our 88 because we're maintaining trade above it. And now we're too close to the roundy not to print it. Guys, this is happening over and over again. And it doesn't matter if it's 6,500. Look at 6,500. Guys, we're in the 69s right now, right? So it doesn't matter if it's 6,500 to 60 or 6,400 to 6,500, 6,500 to 66, 67 to 68. It doesn't matter. And as I said earlier, we come down the same way. This is the other side of the day right here. So we retraced that entire move, and here's how we did it. Roundy goes resistance right there, right? You can see they pulled it in, right? And then they tried to recapture it. Look at what held it in. Look at what held it in. The 12. The 12 is probably the biggest marker on the board. That's why it is so important for us to watch price around. That fail equaled another test back into this roundy. This is where it goes resistance. So if the roundy's resistance, what can we expect? An 88. Well, how did we get to the 88 on the way up? From the 62, right? So if this 88 fails and goes resistance, right? Bar closes below, 92 holds it in, it can't head back to the roundy. We head to that 62, right? The 62 held, and that means we could be heading back to the 88. So there's a trade there if you wanted to take it. If you were working a runner from the roundy and you're adopting this Zen attitude of, hey, roundy resistance, we're heading to the 50, right? That's 50 handles, guys. There's plenty of handles to be made there. But if you're just hanging out and you have no reason to let it go, that 62 fail gets us to that 50. So we've gone roundy to 50 now. Here's the fight. They fight back for it. But notice, guys, I don't have to even draw a trend line. Notice how it's just all lower highs, right? So we know if the 50 fails, where are we headed? How did we get to the 50 before? From the 33, right? There's that 33. This 33 can act as a pivot within this 100 handle block, and you can see where the support was. 33 headed right back to the 50. Right? What held it in? 62. We lost the 33. Here's our 12. We lose the 12. There's our roundie. So again, I get it. Before anyone calls me out on doing the hindsight stuff, there are multiple trade setups within this. If you're able to, I mean, we've had traders capture 50 handle runners, even more. But for me, I would probably from this trade, I probably would have taken 3 or 4 trades to ultimately get down here. Okay, this is just giving you a visual on how we are traveling through this 100 handle block. Thanks, Ray. I appreciate that. Okay, so why is the 33 so important? That's not a spot, Tony. I'm looking at your chart. I've downloaded it. I've got it in front of me. Dude, I don't see 33. Okay, so 33 is a level in my previous class that represented, again, that pivot in the 100 handle block. All right, so this might get a little confusing. Just bear with me. The previous setup with the 33 had this huge chunk of risk on either side of it. It was the only spot that didn't have that 4 to 6 handles of risk. And in an effort to make this a little more, dare I say, easier to trade, we simply moved spots around. And by doing so, we're able to create a 26 spot. The 22 marker never changed. We're able to create a 36 spot. The 42 marker never changed. The old channel rules were this. If price and trade remains above this 26, we go get a 33. And there's a crazy stat attached to that right there. If price remains below that 42 marker, we head back to the 33. So the 33 is very much key. How we apply that to a trade, whether buying or selling it from below or above, is with the 36 spot. A lot of times, if we're coming into a 33 from above, we'll get an overshoot and we'll catch it on that 36 to have it fall back through the 33. If we're long heading into the 33 and it fails, we would be long from 26. So we would already have risk out. 33 is key. Okay? So we would have risk out and then we would get stop out if it fails and comes back into us. And then we'd simply wait for that next trade to set up, right? You saw on the video how we get risk out, stop out. That is a common occurrence with us as NQ traders, but you absolutely have to do that. As frustrating as it is, man, I got risk out, stop out on 3 trades. Zoom out, take a minute and understand why this is happening. It's because you're fighting price. Price wants through. If we're truly in a runner and we're in the right setup, price will develop in our favor. If we're continuing to get stopped out, maybe it's an obvious clue that you need to flip the position or flip your bias on the market direction. Okay? So in other words, if we try a 26 short, because we don't think it's going to head up into the 33, that's just going to shut it down into the old channel, and we get risk out and then we get stopped out. And maybe we try it again and we get risk out, stop out. What is that telling you? That is telling you price wants to go to that 33. So either flip long or let it go print the 33 for clues. Okay? And I get it that I'm kind of making you guys drink from a fire hose. We are more than halfway done. So I want to make sure and get all of these slides in my explanation of these slides, because we still have a lot to go through. And we'll probably run over a little bit because you can always revisit this stuff. And again, for the new folks, when you guys come over into the room, I provide practical application in real time as we're going through the tape with trade setups and then trades. So the old channel, I kind of already just went over this. I updated to make it a little less stressful, or again, dare I say, easier to trade. And it's simply based on the same rules that apply to any other spot test or spot trade, if you will. Okay. And remember, I'm going to lean on this because this is the real crux of this strategy. Spots are fixed entries. Markers are fixed risk. We can always identify risk in any trade if we're using spots. That is the crux of this. That is what I'm trying to convey to you guys. And then price action, repeatable patterns in price that we identify, that allows us to navigate throughout the 100 handle block. Okay? So I explained this already, and I'm gonna kind of breeze through this real quick here. Okay, so putting it into kind of a visual, this is where, now notice this is that overshoot of the 36, or the 33, sorry. This is the 33 right here. Where was the resistance heading into it? 12 markers, good. We head to the 33. If we're able to catch a 36 short, and this was this week when we had a 38 weekly pivot. So that's almost a blind fade, meaning we're just going to take that trade immediately because we know that the weekly pivot could shut it down. Okay? So this trade setup was 36 versus 42. It may have even only owed us a 33. And, again, we're looking at a chart that's already developed. This bar was a big fat green bar, solid green bar when we sold it. Okay? So keep that in mind. It's all about where the bar closes. That broke the marker. That means it headed down to the 26. We know that if 26 is still good, we head right back to that 33. This is a these two trades, very high probability trade, 26 to 33. As long as 42 holds it in, we head right back to the 33. Where's all the chop here, guys? 33. So we're trying to make a decision on where we want to go. And it just so happens that our weekly pivot is hanging out there too. This is that pivot type of activity. We get away from it, we gravitate right back to it. Kind of reversion to the mean, if you will. So here's the exercise that we're going to do where we're going to read the tape and then we're going to apply trades based on all of these things that I've been talking about and based on the video that you guys just watched. This is our chart, okay? So here's a spot test of the roundy. This is just us observing price. I'm just pointing this stuff out. The next slide, we're going to apply trades to this. And the reason that I wanted to do this after the video is because if I did it before, you'd be like, oh yeah, okay, sure, right? So I want to make sure that you guys can grasp that we actually do this. We actually take action on this stuff. Okay, so the roundy is holding, right? Potential high or low as we lift off of the roundy. Another high or low. That's a broken marker, right? So we know that opens this spot right here. Price is still going away from it, but we have to keep in mind that spot is open. So I would say in the room at this point, hey, the 26s are open. The trade application here would have been that 36 short weekly pivot. You would have got a risk out and stopped out. This is the reason we do risk out and put an even stop. We don't need to let a green trade go red, even though our marker broke. That doesn't mean go again. You're getting stopped out, right? You're not just going to add a bunch of contracts because you got risk out and the marker's broken. We don't do that. That's your weekly pivot test. Here's a spot test from below. That is a spot above what? A weekly pivot, right? Or an inflection point, the 50, right? What is that marker? Remember that marker in the big schematic of price? That's that 62. So if that 62 holds it in, as identified by potential lower highs right here, and this is the stuff that I'm telling you guys as price is developing in the room. I'm saying, hey, where did it come from? This thing just came from the roundy. This thing just bounced 60 handles. Let's see if we can turn the market. How do we do it? We got to start with resistance here. Here's our high of the day. Here's a lower high. Here's potential lower high. Lower low. Lower high, lower low. There's our 50, which is an inflection point. Remember, keep in mind these big chunks of price here. Yes, Brian, you could have. Absolutely. You could have. These are these big chunks of price here. And the reason I want you putting them, I literally want you to put these on a Post-it on your trading screen. If you do that, right? If you're putting Post-its on your screen, in the corner of your screen, I would put one that says spots or entries. And then I'd put the other one with this price schematic. So if the 50 goes resistance, we know where we're going, right? We're going back to the 33, which is here. And remember that open spot? There it is. So when a spot, quote unquote, opens, right? Whenever I always do the air quotes, and you guys can't see me. We have to be cognizant of that, right? This is where the 26 opened. Does it matter up here? Are we loading the boat short 56 because we're going to go get a 26? No, we're not. It comes into play when we get back below the 50. When we start talking to each other as traders in the room, and we start, because again, we're a community of traders, and like it or not, there's a lot of NQ traders in the room. So I might say, hey, if the 50's resistance here, we could go get that open spot at 26. Remember, the 26 is open, right? So there's a lot of chop between here and there. And again, more trades could be applied to that. But you simply have to be aware that when a spot is open, they typically resolve in the same session. In this case, it was within an hour. And look at the reaction. Spots is where I expect reactions. That's a 26, right? What did it do? It reversed right into the 33, into the weekly pivot, and then right back to that inflection point. Spot test from below. Another one, right? And there's something going on with this bar that would lead you to really pay attention to this. And also look at the measured move here. So one of the things that I encourage our NQ traders to do is we always ask ourselves before getting involved, where did it come from, right? This is the first pass of the 56 over here. This is the second pass. So this is still a valid setup. Remember, we can identify risk no matter where we are. We know if we get back above this 62, we're going to test the high of the day. And we can deal with the trade accordingly. But we know that it just bounced 30 handles. Permission to believe it's either going to backtest this inflection point. Remember, just like the video, we shorted an 06 for a backtest of the roundy. This is shorting a 56 for a backtest of the 50. Target is the weekly pivot. This is that weekly pivot chop that just happens. But I'm going to show you now how we apply trades to all of this and then see how we did for the day. And this is going to be based on trading two lots. Remember, with this big volatility, we don't necessarily need to trade big size. Okay, so we identified a potential long on a spot test from above into an inflection point. We're going to buy that 06 against the rounding. We're going to exit as we head up into the 33, right? So in the room, and we did this trade, we're long 06, 06 half. We took risk out into this. We said to ourselves, everybody, if the 12 is good, we're heading to the 33. Let's front run the 33 in case it rejects. That's a solid 25 handle runner to the 31. And we did that in this room. That's our weekly pivot test from below and the first one. We want to try that, right? We want to get short that if we can. We know it may only owe us a 33, but we get a release through the 33 and through the marker into the spot above. It could have went further, but we know the 26 has that ability to reject, and this is where I would take a trade off maybe a little too soon, but I did it nonetheless. And look, I mean, come on, that's risk out plus 10. You went from 36 to 26. That's a very solid NQ trade. Why would we short the 56? This looks like a trend, Tony. Why would you short that? It's all based on that price, the price schematic, right? 62, if the 62 holds, we're going to rotate back to the 50. Now this trade right here, you would have had to probably go again if you took this first pass. This is where the marker breaks, okay? That opens the 46, knowing that this really only owes us that 50. This is where the marker breaks and opens this 46, right? So notice what's happening here. This is a marker break. This is resolution to the spot. This is a push through a marker that tests a spot and then closes back inside the risk zone. This is where if you were short, you took 10 handles of heat before seeing it back to your entry. The marker is still the same. So like on that video where I'm kind of sitting there going, I don't know if I have to let the bar close. You have to let it close. There are too many instances where we take stuff off prematurely because of what we're thinking is going to happen. Covering into this spot, I mean, that's a solid trade. So for this, we would have had to go again. We would have had to go again based on this rejection from the 50 or from the 66. It's still 62 as far as being the trade. This one might have been tricky right here. Remember the open spot, 26? We could be sitting there with our catcher's mitt, knowing it only owes us a potential 33, and in the overall price, that's where it could absolutely fail. But we want to try it. Here's Brian. This is probably what you're talking about with not knowing when to get involved and price is just going to slice through you. You got to step in front of this and go. Just like we were selling this because of where it came from, we're going to buy this because of where it came from. This just came in 40 handles. Permission to believe it's going to bounce. It's an open spot, so it tends to be a magnet. And then there's that high probability trade. And our weekly pivot as well. Short entry against that 62 again. Back to the weekly pivot. Okay? Those are 5 trade examples. And this one might have been a little tricky right here. And I will walk you through this type of stuff. I will even say in the room, going again. This bar doesn't really tell us the entire story. There are entry opportunities within this bar because obviously the high of this bar. Okay? This is rejection. Our antenna goes up. That's potential rejection right there. Okay? So how did we do? On the long 06, we got risk out into the 12 at 11. Right? We get long 06, we offer 11. We took that runner all the way into the 32 marker. So we're long 06, we got out at 31. We short 36 against the weekly pivot. We got +5 and then a +10 into the 26. Remember, it kept going. Right? So we left some on the table, but this is what we ID'd as a solid trade for us. We short the 56, risk out into the 50, cover into the open spot for a +10. That one would have required going again. That's tricky right there. So that may be one we want to actually put asterisks next to over here. Okay, but we would at least gotten risk out on that first pass. We long into the open spot. And again, all we were looking for, these particular trades where we get risk out +5 or +4 and then a +10 into the next spot, that is the perfect NQ trade. If you can do that 2 or 3 times a day, you can get all you need out of this market. That's what this is about. Shorting the 56, we always get a back test. Not always, I shouldn't say that. We typically get a back test of the 50. We front run that just like in the video where I shorted 06 and I was front running the roundy at 01. I would short 56 and bid 51. And then we knew if we lost the 50, we've got an even stop. If we lost the 50, we have a potential to go all the way back to the weekly pivot. So if we had adhered to all of that, and again, I'm putting an asterisk next to this one. So let's even just cancel that out. Let's just call that a +5. This is still a very, very nice day. 5 handles. or 5 trades, sorry, 5 trades, 90 plus handles, depending on how you manage this. If you adopt the big chunks of price, we're going to get bigger runners. Okay? And you saw on the video how we think through this stuff and how we talk to ourselves through this stuff, and we remain calm and we watch price around markers. Okay? This is a Tuesday for Mario. Seriously, 2 contracts is really all you need. You don't, and even if you didn't capture the big runners, just the trade setups themselves, we took heat on maybe one trade that actually, if we blinked, it came right back into our risk zone. This is how these trades can add up. Okay, so other indicators, and I'm kind of breezing through this because I want to leave the last 20 minutes of this thing so we can kind of have a Q&A. Mario, you're killing it. Come on. That's a Tuesday for you, and you know it. So other indicators, one of our other instructors, Corey Rosenblum, he does a lot of more macro, more trend trading, if you will, and I'm trying to do a little more collaboration with Corey to adopt some of his rules that he applies to the ES to the NQ. For you ES traders, when you guys come over to the room, I have an ES chart set up the same way for intraday trades, providing areas of entry and risk, using risk markers to get involved. This is the addition and what Corey brings to our chart, and that is the 20-day and the 50-day exponential moving average, as well as the tick comparison. This chart, by the way, is also shared in our room, so you'll have that. And then as far as like the tick stuff that Corey does, he has classes that go through that. So as you guys come over, become Total Theo members, you'll have access to all of his stuff. I'm getting a lot of emails from traders that are doing a blend of my stuff and his stuff and finding it very, very successful. Okay, so it's going to pay to pay attention to what Corey's doing on the ES. We can apply a lot of that stuff to the NQ as well. So applying his trend rules, he encourages us, in one of my summer school classes that you will also have access to, has a complete deck on this, presentation on this, about identifying what kind of day it is and then planning your trade accordingly. That is a big thing with Corey, and he has that ability to say, hey, we have a possible trend day on deck. So that engages his trend day rules, okay? For me, we base the potential to identify the day on the longer time frame. So in other words, if we have some big, massive breakout bar on the daily chart, we want to see continuation of trend, but it may find exhaustion, and we may have what I call inside day action, right? Which is a range-bound tape, which is a two-way trade, which means we can go long and short. It's not just going to be a short bias tape or a long bias tape. Yes, Thomas, all of my stuff is available. And if you're not on Thinkorswim, all of my charts are built in Thinkorswim. If you're not on Thinkorswim, we do have the levels built for Ninja, and then if any other, like TradeStation or anything else, you just have to email me and I'll walk you through building your chart. And again, all the stuff I share, I just really implore you to leave it here. I don't want to see this stuff out on Twitter and spammed all over the place. There is a lot of nuances that apply to this, obviously, as you saw in the video. So, just throwing my chart out there, it's not, you're not just going to start printing money. If price and other indicators are setting up a trend, and again, Dale, I'm going to get into that AD in 1 second here. We want to obviously play his trend rules, and that is buying the pullbacks, retracements into those EMAs. We often call those flags. So the goal is to buy or sell into the EMA depending on trend, exit, prior high or low. And then he encourages you to do a trail or a trail stop, sorry, to trail your runner under the EMAs or above, depending on trend. So for more information on Corey stuff, when you guys come over, become Total Theo members, there's a section in our site called Corey's Corner. All of his classes are there. Corey does a fantastic job of creating a daily plan. He's a super instructor when it comes to the ES, and I definitely see more collaboration between the two of us in the future. All right, so again, you guys have this deck to take home, to print out. So I'm kind of breezing through this, if you will, but wrong way. Simply put, this is an example, a visual of a trend day where he is saying buy the pullbacks, trail under the under the EMA, buy the pullbacks. Look at how it lines up with the spots and markers, right? This is a open spot. You buy the back test of the spot to seek the open spot, supported by, guess what, right? This marker never breaks, neither does that EMA. So this is a really good example of how this could help add a little confidence. Brian, this might help you. This could add a little more confidence to your entries and holding runners. Okay, and this I do have a chart with all of his stuff on it. Like I said, that dual pane chart or a single pane chart to give to you guys. Now let's talk about the AD. Dale, this is for you and for whoever asked for the AD. So the AD, the acronym that I use in the room, just an abbreviation I should say, is for the advanced decline on the S&P, right? And that symbol is right here. Cash ADSPD, that is the advanced decline for the S&P 500. We utilize it for clues. This is the only quote unquote indicator that I truly use. And it is used to identify a trend or identify selling or buying. So I always say, oh, they're selling them, right? So they, the collective they in the market, if they are selling them, we're going to have a declining AD. If they are buying them, we're going to have a rising AD, right? So we want to go with them because they are moving the market, whoever they are. It's just an indicator that signals broad-based buying and selling, period, right? I always like to attach some persona to whoever's giving us grief or love. So how do we use the AD? The only time that I use the AD as an actual entry opportunity is at the open. Very simply put, and this is going to fly over the heads of a lot of new traders that do not watch it in this manner, and that's fine. We have Tammy, who is a longstanding member in our community here. She will call out the AD for you guys over and over and over and over and over again. And we simply watch it develop, and we use it based on, again, a rising AD supports long trades, a declining AD supports shorts. At the open, when we have a gap up open, right? And this is where the Corey stuff comes into play. So what is Corey going to tell you if you have a gap up? We want to go for a gap fill, right? So if we have a gap up in a strong AD, so an AD, let me go back, an AD over here, these are the extreme zones, okay? These are the extreme zones. This is a very strong AD. At the open, we look for somewhere, a spot to get short. And then we want to see AD support that trade. So I'll throw a question out real quick. If we got short with an AD of 330, what needs to happen after we get involved? I'll get to you, Stardust. Right. AD needs to fail. AD needs to come in. Remember, this is what triggers a short, right? So we're going against AD. We're fading AD. Now, once we're involved, we want to see this 330 go 310. We want to see it crack 300 and keep going. And typically, price follows right with it. Now, you're asking yourself, Tony, this is an NQ class. You're talking about the advanced decline for the S&P. Dude, what just happened? The reason that we watch the advanced decline for the S&P is because it is the E-mini that is the most popular E-mini. It's the most actively traded, most liquid E-mini there is. And S&P has long been considered a barometer for the entire market. So that's where we focus. And the other true concept is this. Let me go find, I'm jumping around here a little bit, but give me 1 second. You see this? This is a 2 minute, this is a 5 minute. We're in lockstep most of the time. I would say well over 80% of the time, these are in sync. Okay? So if the ES is coming in with AD, this is a strong AD, but if the ES is coming in with AD, we can find a short. We're watching the ES for clues. Right? At the end of the day, it doesn't forego our primary objective. That is to get risk out of these trades. Period. Okay? Now, the same occurrence. If we come into a gap down, right? We come into a gap down, they're selling overnight, we walk in, this has been what we've been seeing lately. We walk in and, the NASDAQ's down 1.5% in Globex, and the AD opens up negative 330. Well, guess what I'm doing? I'm buying that weakness. We're selling strength, we're buying weakness. When I buy it, what needs to happen? Right? Because if we have a gap down, we're going for a gap fill. If we have a gap up, we're going for a gap down. We would get short to go for the gap fill. We get long to go for the gap fill. So the AD has to support that trade. By watching the AD when we get involved, because it doesn't always happen, right? Doesn't always just go our way. We're watching the AD. If it persistently stays weak and under this 300, that signals a potential trend down day. If we don't get that reaction when we get involved, then we need to potentially get out of the trade and see if there's broad-based selling to support a trend and engage Corey's trend rules. Maybe there's no gap fill. That signals a trend down day, right? Same thing here. If we get a big gap up in the AD and it stays up there, that signals a trend up day. And if you're confused by this, don't worry. I mean, I go through this at the open ad nauseum. Okay, you're not going. And there's so many people that watch AD with us in the chat that you're going to learn very, very quickly. So after the first 30 minutes or so, we're not using AD to trigger an entry. We're simply using spots and risk markers to navigate through the chart. Dale, I share my AD chart. That AD chart that I showed you is shared in here, right? And then if you notice on these other charts, let me go back because that's a good question, Dale. I have an AD badge that I also share with you guys so you can watch it. You don't have to just sit there and stare at the chart. We watch it here. So again, and this kind of goes with what I was saying, and once we're 30 minutes in, if we get long a spot, we look up the AD, we want it to rise. If we get short the weekly pivot, we look at AT, we want it to fail. Okay? Thanks Hal. I appreciate that. So that chart is what I share with you guys. That's what Hal just shared. And you want to open that, keep the big chart, because as you'll see in 1 second here, price does exactly what it's supposed to do, or does the same thing on any other chart on the AD. We can read price in that manner, i.e. higher highs, higher lows, that type of thing. But after the first 30 minutes, it's important that we don't look up and go, oh, hey, the AD's 300. I need to sell that. No, no. After 30 minutes, if you have an AD that is that strong, that signals strength in the market. That means you need to get long. And vice versa. If we're just getting crushed and we're not, and these bounces are getting sold and we just can't get off of negative 300 after 30 minutes, that means we have a potential down day and we want to stay away from longs. Okay? A persistent AD can signal a trend. These are all these little things that we use, that we always use as we go through our day. This is really the only indicator that I kind of lean on. Now, that being said, there are days that it's not applicable. There are days that where the NQ is, off on its own little tangent, if you will, and that would be, maybe Apple's having a bad day and that overwhelms price, and therefore we're not in sync with ES, right? There are days that the AD is just flat and it's not giving us any clues. But in this volatility, we're able to glean clues from the AD in order to get done, get what we need done. Yeah, Don always talks at the open. Sometimes we do contradict each other. Absolutely. Don, in this environment, and I wanted to answer this question for Ernie. Ernie asked about, Tony, you're on when Don's on, and you might be saying the opposite of what he's saying. Who do we listen to? Don is, he really has the market on a more macro level, and he's reading that undercurrent of the market, and he is damn good at it. So you need to listen to him in regards to that. We're not competing with each other. Don's time frame is much different than a 2-minute bar on the NQ. That's essentially what needs to be understood. But when Don is saying, hey, we're going to see a whoosh here, or we're going to see a bunch of selling coming in based on something he looks at, and then all of a sudden we're getting short, or you're getting short, and that comes to bear, then Bob's your uncle, right? You're on the right side of that using both of us. So neither one override the other, and we're not competing. I'm not listening to Don and saying, oh no, I'm going to go fade Don. We don't do that. A lot of times I have music on when I'm and I'm really in a zone, trading and typing. I got a lot of stuff going on. Okay, so that answers that. But fading a strong AD. So here's where at the open, right? This is at the open, and keep in mind it takes about 30 seconds or so for all these stocks to open. You have 500 stocks in the S&P 500. They all have to open to give you this number. Now, they're obviously almost very highly liquid, highly followed stocks, so you get your reading. This is what you do. You get short, and then you want that to support that short trade, right? But it doesn't mean we just throw a market order at the market because this is happening. It sets up on our chart. It sets up on our chart. Ernie, adding Professor Bierman's MACD, add it to the bottom of my chart and just apply it to the rules. That's just another indicator that you guys can use. If you guys like MACD and if you guys like RSI, anything else, just add it to the bottom of the normal NQ chart. I don't want to sound cheesy and say I'm a purist, but I really like a clean chart with just bar for bar versus spots. Just because of that screen time and watching it for so long and knowing the character of this thing. And remember, I'm going to say it again. We're trading a 100 handle block. We're trading levels that repeat themselves every 100 handles. There are recognizable patterns within that, right? So we're simply just getting risk out of trades and letting price develop from there. Keep in mind what we're trying to do. And then we're identifying these big chunks of price in which we travel, right? So if we find ourselves having hesitation, like we have a gap up in the market and I'm yelling short, and Don might be saying, well, hey, we have a potential trend day on deck. I can sneak in a trade short before AD responds and gets back on trend, okay? It's all about us taking advantage of price action. So here is something that would signal a trend day. This is after the open. This is well into an hour of the day. This did not signal a short, but here's where AD gets below 300 and stays there. Okay? This is all selling. This means that they tried to bounce them, right? And up here, over 150 stocks in the S&P 500 were higher than they were, or lower than they were previous day. Now almost all of them are lower. That is broad-based selling. We find a way to get short down here. Here's a situation, sorry for the fuzziness. We haven't seen many of these. I had to go find this. Here's a situation where a weak AD gets us long, right? We're going to buy that weakness. I'm going to do that 99% of the time. Unless there is a big headline that says, the world's coming to an end, don't buy, right? It's unwinding, right? I'm not going to step in front of that. But if it's a normal trading day, all this, big catalyst withstanding, I'm going to get involved. AD tries to help it. See how it just persistently gets back. But see how it's pinned down here in between the 300 and 400 all day long. This means they were selling pops. They were selling the market. We get short, period. That's it. And only until it breaks through the 300 is the trend over. And look, that's the close of the market. That's just short covering. Short, 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 short. They cover into the close. This is how we identify a trend day. Believe me, this keeps us from blowing our account up or blowing our day up. Because if we're sitting here fighting a trend down, we're going to get loss after loss after loss. And even if they're -4s and -3s, they will add up and it will hurt. So we simply want to go with price. If they are selling the market, we want to go with them. All right. And I'm going to wrap this into a Q&A here, and we can spend as long as you guys want, right? I don't want to take it too far past like 1:30 for anybody. And I'm really aware of people's time, and I appreciate you guys spending the morning with me. I don't want to carve into too much. If you do have to leave, you can watch the archive. But I know we have a lot of questions, and I want to get to them. So putting all of this together, we've covered a ton today. We saw a video of the practical application. I absolutely encourage you to rewatch that many, many times. So how do we just forget the fire hose I made you just drink out of? This is literally how you trade the strategy. These are the basic fundamentals of the strategy that you adopt as your rules to do this. We use spots as entries. Put a post-it note on your trading monitor. That needs to be ingrained in your brain. Because if you use spots as entries, you can always identify risk in any trade. Okay? Let price come to you. Don't chase it. As evidenced by a lot of these charts, we've seen that these big moves that get pushed up tend to come back. So if you are, let's just say that you're a positionally long trader. Like, I don't like to short the market. I shorted the market during the bull run and got my, proverbial ass handed to me. I'm a long only person. That's fine. You can still identify risk in the trade, but you have to let price come to you. We don't like to chase price around, right? Because we'll get on the wrong side of this thing pretty quick. And I think that the bigger chunks of price that we've been talking about will help you forego multiple trades throughout the day and chasing price. If you watch for those levels, you simply wait for it to come to you. Okay? We put our entire position on at entry. So if we're a 2-lot trader and we're buying a spot on a test from above, we're buying 2 contracts at the spot. If it's a 56, I know I keep using that as an example, we might bid 56.5 to get involved. The marker below the spot, 52, is the marker for the trade. When price reacts in your favor, we've been getting a lot of +5s lately. +4 has always been the formula for getting risk out. We have been getting +5s. Some of these markers are actually 4 handles from the spot. So as you saw in the video, from an 88, we're taking risk out into the 92. So we're actually front running that. So it's not even quite 4 handles, but we want to get risk out of the trade, right? So there are different ways to handle this. If it's an aggressive trade, maybe we tighten up risk and we take risk out for 3 handles and go even stop. Same thing on shorting the lows. If it's still going our way and we're potentially getting a trend down, we just want to simply protect that entry in case it reverses back on us. Let price develop and see if we can open the corresponding spot by breaking the respective marker above or below. Okay? That's important. Remember, on the video, we saw how markers break and open spots, and price fulfills those open spots. So we got caught up in that by trying to read overall price and buying a 96 with that 88 open. What happened? The 88 eventually printed, and we ended up using that reaction to get out of the trade we were in at that marker, and then we still flipped long in the same instance. And we were able to recapture the handles that we lost plus a few. Once we have risk out, I say offer your runner into the spot or trail your stop based on those bigger numbers. Remember, the perfect NQ trade is risk out plus 10. So that's plus 4 plus 10. That's net 14 on the trade. Divided by 2 is a 7 handle winner. You only need a few of those a day. Okay? Remember, price is the only constant in the market, is the only thing that is not subjective. It is what my strategy is rooted in. That's why on my chart, you don't see a lot of trend lines. I'm not a big trend line drawer. When I do, it kind of, we all rejoice in the room, but you can visualize it by reading the bars is what I'm essentially saying. And I would encourage you guys to get that. Then if you see something that you like that Professor Bierman or Don's not an indicator guy, but if someone's using an indicator that appeals to you, throw it on the chart. There's nothing wrong with that. It does not override the normal rules of the chart, which are spots as entries. Price has to develop. We look for spots to create a reaction. So we want a reaction off of any entry we take, right? We don't want to take heat. When we do take heat, we rely on the marker to support the trade. Not every trade's a winner. We do have losers in here. Technical analysis, again, can lend itself to interpretation by the viewer, therefore can be subjective. I'm not discounting you guys that are calling out heads and shoulders, inverted heads and shoulders, and cups and handles and all that. I'm not discounting that stuff. If it works for you, by all means, still apply it. What I will tell you is if you're a TA person, trader, and it does work for you, by using spots, you're now going to have a very defined place to get involved on a spot, an entry. So you can recognize a pattern and go, all right, well, how do I get involved if this pattern is going to play out? In other words, I'll entertain this for 1 second. So let's say there's a head and shoulders on your 2-minute chart or even on the bigger chart. Well, you know where the neckline is, right? And the neckline's probably on a marker or a spot. That should have been a light bulb moment for you TA guys and gals, right? So you can overlay stuff that you're already using. My thing is all about price, and it's all about getting involved and making money, booking handles, right? It's all well and good to identify these patterns. If you can't apply a trade to it, then what's the use? So it's all about taking action, getting involved, okay? Learning price action is vital to your success as an intraday trader. I don't care if you're trading NQ, ES, Russell, the Dow, stocks, it doesn't matter. You need to learn to read price. And the best way to learn to read price is, in my opinion, with index futures because of how many times they set up throughout the day, whether it's NQ or ES. Multiple setups through any normal trading day. Okay, bar for bar analysis around the key levels, and we can determine the optimal entry for the trade. Price, 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 price. I cannot tell you that enough. All right, let's do some Q&A. We've got about 10 minutes proper left of the session, but I'm going to stick around for longer if you guys have more questions. So let me scroll through here and see what I missed. Again, thank you to everybody that's been chiming in. Billy, Susan, Anthony, Carl, Billy, Katera, all you guys that have been helping me out. Thank you so, so much. Dale, how is VWAP used? VWAP is used just like one of those EMAs. It's basically used as a bull bear kind of level. Let me pull up a chart for you real quick while we do this, and let me put VWAP on there for you guys. Okay, here's how I set up VWAP. It's a study, you edit studies, and by the way, here's our AD badge. Let's add that too. It's going to be NA, but so I put the VWAP study right here, right? And then you have to edit this study. And the way that I do it, I only want the VWAP. VWAP, volume weighted average price. It acts as a moving average. You'll see in 1 second. I like to color it yellow, and then I like to make it a funky little pattern like that, okay? Now there's an upper band of VWAP, I hide it. There's a lower band, I hide it. I only want the moving average, the VWAP. So VWAP tends to act as a moving average to support a long or resistance for a short. So long above, short below. Okay? And VWAP is used by a lot of professional traders as a guaranteed price through their trading day. So we tend to see price gravitate back towards the VWAP. We get too far away from it, it could be potentially become a target for us. Again, none of this stuff overrides spots. This is Friday's close, where they decided to try to extend the Santa rally. So as we go into Monday, we've got this 26 open here. Let's do this while we're on this together. Here's our daily chart. By the way, we were watching all of this. Look at this rally. We were all over all of this. Even this back test of the mid band. We applied this on a short-term trade. So this clearly tells me bulls are still in control. This is a higher high versus all where this other fail right here. These are, ooh, that's a higher high versus that too. So I don't want to predict anything, but we could see huge rejection off the 7,000 rounding. We could see continuation gap up. We could see it grind to this in Globex, but that is a definitive close above the 50 and above the 62. We closed on the 66. Okay, so the 69.50 is going to be key on Monday. But let's go ahead and do this. Go to our weekly chart. This is this week's bar right here. Look at the weekly. Talk about stark contrast. That mid band is way up there on the weekly. And this still does not look that bullish. This is potential trying to save it. But when we put our cursor over this bar, you get a printout up here. So let's do the weekly pivot together right now. So the high for the week is 69.67 plus the low is 65.30. Wow, that's a hell of a week. Plus the close, 69.66. That equals 20,464. You divide that by 3. Our weekly pivot is 68.21.33. So we go, get that back to your daily. We'll go back over to our chart. Look where the weekly pivot is. You want to talk about the bulls being in control? Look where the weekly pivot is on this chart. Whoops. 300 handles lower. It's right here. So our weekly pivot, and I give you all this. We're all really good about giving out the weekly pivot on ES and the weekly pivot on crude and NQ. So we go in here at 68.21.33. That is the level that we will be watching throughout the week. We're obviously 140 handles away from it. So, chances are, again, for a gap up into some of these other levels, we could open up here, grind to the 7,000. There's a very good chance we might not even see the weekly pivot next week. But we have to do the math regardless. Okay, so we do it for the ES and the NQ. So let's continue to do some. If do me a favor, guys, if you're still here, still with me, and you asked a question way earlier and it never got answered, just please cut and paste it right back into the room. And then I also want to share this with you guys. There's been reference to summer school. So as you guys become Total Theo members, you'll have access to all the archives, all the classes. I did a summer school exercise for the month of August. And that is the entire month has a lesson attached to it. And it's a deeper dive in some of the nuances that relate to the class that you just took. Yes, Thomas, crude works the same way. I have a crude chart that is built. I need to update it with crude's recent massive bear market. So I do have a crude chart that is shared, and it's simply based on risking 10 cents to make 20 cents on any given trade. I don't, Anthony, I don't. It doesn't have that same volatility. So I just refer to the ES chart. We can get, you know what, shoot me an email. I know you trade a lot of ES. Shoot me an email when you're making your daily plan, and let's look at potential levels. Thomas, how do we know if a spot is open or closed? So right here, from a spot, the only way, and it's a great question because I don't think I covered it. Here's a better example. The only way you can open a spot is coming from a spot. Okay? So from the 06, if the 12 breaks, it opens the 18. This is the definition of a broken marker. This bar closes at 14. That's above the 12. That means the 18 is open. That means if you're long back here, that your potential exit is into the open spot. If you're short and your marker broke, these are the bars that you use to get out of that trade before resolving to the open spot. Does that make sense? Yeah, Dale, we're in here all the time. Carl has taken it upon himself to be the Globex commander-in-chief. He's in here rocking Globex every night. Oh, hey, Clayton. Okay. That's a good question. So how many spots can be open at the same time? What are the implications of having multiple spots open? If we're leaving spots open like this, we don't try to read into it too much. Remember, if a marker breaks, I want you out. Use the next bar to get out. Short 06 into the 12. Whoops, it broke the marker. This reflexive kind of retrace, because we see this a lot, back into the original risk zone is where you take it off. You saw that in the video. We had a broken marker. We took the entire position and offered it, somewhere in here to get out. It's a loser, period. Not every trade's going to be a winner. It's a loser. These spots remain open until they print. So until they get tested, they will remain open. This is something that you might want to keep tabs of on your trade blotter. There's no real rule about how many open spots you can have. Now, this 06 is not really relevant to trade at 66, is it? 56 is open too. But we want to be aware of this stuff, because as we start to come in and we start fulfilling these other open spots, maybe we're short 26 and we're like, oh wait, this 06 is open. And that maybe keeps us in the trade. The 26 is open. The 06 is open. The 56 is open. This is the only trade that really matters, or the only spot that matters right here. So we're not going to go get this other stuff unless we take into consideration the bigger chunks of price. 50's got to go resistance. We got to go get the 33, and then we go get the 26. Awesome, Poolside. I'm glad you enjoyed it. And I know that some of you guys that have been have just met me today, probably like, wow, you just really talked over my head, dude, the whole time. That's why you're going to play this back. That's why you're going to go over this deck ad nauseum. Just go over it. Everything is in the deck. You just have to reread it. When you guys become Total Theo members, again, and I am harping on that because I think that you should absolutely consider doing this. Not just for the NQ. You've got access to Corey. You got access to Don, to Professor Bierman, to Matt and Brandon. We have some wonderful instructors here. If excuse me, if NQ is not your cup of tea, there's plenty of other opportunities to trade the markets with our other instructors. But I want you to just take it all in. The concept is simple in that we have fixed entries. We have fixed risk. When markers break, we go to open spots, right? This is a situation, right? This is one of those situations where, like on the video, you'd have to end up going again, or you're going to miss this, and that's fine. It's okay to miss moves. You don't have to be in every single tick of this market. But if you bought this and your marker broke, you use this reflexive bounce back into the risk zone to get out. Because if I take this to a right edge, and I would have been out of this trade, by the way. I would have said, uh-oh, 50 is resistance. We just lost the 33. We could be heading all the way to the 12. I'm long 36. Do I want to get out at 33? Yes. The answer is yes. I want out. I'll take a -3. Even if I miss that, I don't care. I'll make that 3 up somewhere. I'm pretty confident in that. Okay, so price. Roger, you can trade futures through your IRA. I don't know about the separate account for intraday. That's a question for maybe some others that are trading through their IRA. You got it, Ray. Thank you for joining me. Thank you, Elton. Yes. So Clayton says when the spot, is fulfilled, the open spot is fulfilled. That's what I call it, fulfilled instead of closed. Price has to open it again. And remember, we can only open spots from a spot. So like here, for instance, again, marker breaks, opens the spot. This bar just continues. This marker right here opens this spot. So the perfect trade to apply to that is shorting this spot if you can to go to this spot. Otherwise, you're buying this spot against this marker. And this is sloppy. This is really sloppy price action here. So can you reopen? I think that's what you're asking, but absolutely. We typically resolve open spots in the same session. Thank you, Katera, for your help. Thanks, Roger. Oh, yeah. Frankie's still here. He's in the other room with Mama. Get him, Ken. I'm going to go get on my bike. All right, you got it, Sam. So, again, guys, I understand that there's going to be a lot of head spinning. This is a very unorthodox methodology. It's not something you've heard of before. And again, we've got a lot of traders putting it into practice on a daily basis. They're actually making a living doing this. Okay, Stardust, that's a good one. Thank you, Katera, for posting that. So price action last week was extreme. How do you contend with those days where the chop is extreme and you deal with a couple disaster stops or perception of that extreme chop? Let's go back. We've been having it every day at the open. It's right here. This is some gnarly chop right here. The way that I trade this, Stardust, is I'll take a trade setup as it presents itself. I will buy a spot test from above or sell the spot test from below based on an open spot, right? And I'll sell an inflection point. I won't get involved in this stuff. I'm just going to take spot trades. If I get risk out, stop out, and it just is doing this chop, this isn't as bad as it was the other day. I just simply step aside and I wait for resolution out of the chop. And then obviously I'm watching the inflection points. Watch those big key levels, Stardust. That's in addition to your stuff that you might not be using. And that's going to help you avoid multiple trades in one area, because here you might say to yourself, well, you know what? Look, if the roundie is going to go resistance, then we're going to head back to this 88. If it's going to go support, we're going to at least go get a 12 test. Let me see if we can do that and break the marker and go from there. Right? If the 12 holds, we're going to go get that 33. Whoops. Funny how this thing just dies. So I hope that answered it, Stardust. Todd, Tony, have you ever watched NQ Weekly Expected Move? Don says that multiplying expected move Qs. I haven't, because I'm just so focused on this, Todd. But I would encourage you to do that. That's bigger macro stuff that I'm talking about that Don is so good at. So absolutely apply that stuff. Keep that stuff in the back of your head in terms of those big expected moves on the weekly. Awesome, David. That's perfect. You just made my day. David said he had 3 or 4 aha moments. David, you need to get with Thinkorswim and do the application to trade futures. They'll approve you right away. Well, first pass is, so you saw on the video, Greg, as far as the back through. Rewatch the video in terms of that. We tried the back through on an aggressive long. Our marker broke. We still ended up going and getting that trick trade, right? First pass is just that. It's first pass. So, and I talk about passes into spots as first pass at the bell. Now, obviously, we want to be aware of how many times they've been tested in Globex, but this is where the action actually starts. So first pass for me is in RTH. This is the first pass of the 77 from above and a new low. This is the first pass of the 88. Or as we're calling them now, the friggin' 88s, right? First pass of the 06. Actually, nope. First pass of 06 might have been within this bar. It actually was not, sorry. First pass of the 06 is right here. A pass has to come from at least 4 handles from above or below to be considered a pass. Typically, you want to see it come from a spot as a pass like this, or from, at least, I would say at least 5 handles. Paul, can you speak to statistically from your experience what we might expect from spots? Example, fade the 88 or get long 26. I'm not really good about doing like stats, but that 26 to 33 has a very high probability. Mario shared it with me. He's got some crazy stats on the NQ, and he's very forthcoming with, or he's very generous with sharing his information. I don't have a specific stat. I'm serious, Paul. I just try it, right? As long as it's not persistently into a spot or multiple tests into a spot, I just try it. That 26, now you know I don't like trading at 88 that much. I'll just almost forego doing anything, right? The 26 is almost always a buy coming into it from above. I almost always take that trade. We'll work on that. And then you corner Mario in the market or in the chat room and ask him to share some stats on spots that you're interested in. He has them, I guarantee it. Thomas, you can do bracket trades to get risk out because the market is moving fast. I don't do bracket trades, and typically the market's not moving that fast that I'm not able to put my risk out there and then go even stop. So it's all just like you know we showed in the video. It's just about navigating through this. Now, I encourage all of you guys to not just jump in and start trading this. You need to trade this on the sim, on your simulator, to get the mechanics of this and all of that down pat, where the market is moving fast, but you know if you want to get long based on a trend, you need to be bidding here. I would say that 99%, if not 100% of my trades are limit orders. I'm either bidding to get long on a spot or I'm offering to get short on a spot based on overall price. That's the catcher's mitt because of the velocity of the trade. Like here, for instance, there's plenty of time to get long. Here, if you got long the 96 half, that would have got your entry. 96 half, you would have got risk out, stop out. So, I mean, I know that it is traveling super fast, but it's not so fast that you can't do this all manually. And, you know, by the way, I have this set up. You got to have it on auto send, and you've got to have it. I set it up with one at a time. So I'm not a big bracket trader. I'm kind of old school in that regard. Thank you, Susan. Great to see you on Saturday. Jeffrey, are there times when you buy the AD strength versus selling it and vice versa? Yes, that goes back to the slide where we have persistent trend. So if the AD, again, if there's a catalyst, you know, and the only catalyst that's on deck right now is China, right? If they do a deal at, you know, with China over the weekend, we're going to gap up and we could gap and go. So we'll have to respect AD based on that. But a persistent AD signals the trend. If we open with a 400 AD on Monday morning, I'm shorting that. I'm going to take it. If it turns out to be a bad trade, then I'm going to try to find a way to get long and then see if AD is going to support it. Same thing on the shorts or the longs. Sorry. If we have a weak AD, I'm going to buy it as a dip buy. If it does not react in kind and does not allow me to, you know, make money on the long, and we have a persistently weak AD, that signals that trend down day. So I think that maybe if you apply Corey's stuff to this, Jeffrey, it might help. Thanks, Carl. Appreciate that. Thank you for your help. No, I know, Kim. Thank you so much. And for those of you, you know, veteran NQers that hang out with me a lot, I'm going to do a follow-up class from this very early in the new year. Kind of have it on the tentative calendar for January next month for the next, like, part 2 of this, or the advanced type of NQ trading class, where we go through some more nuances, more video type setups, that type of thing. I think the video thing is a little bit of a breakthrough in terms of trying to teach this, because it's hard to do it on slides and do it on a Saturday when we don't have an open market. And for those of you that are going to be joining me in the chat room on Monday, I'm going to do the open. So we're going to try to navigate price at the open. We may not even trade. We'll have to see how it goes, depending on the overnight trade. But I'm going to do the first 30 minutes. And on all you newer folks, I'm going to be in the room for the balance of the day, talking through price and providing setups throughout the day. So all of you that have purchased the class get a free week in the room. And I would bet that after that week, you're going to see the value in being involved in our community and in the room real time, if this is something that appeals to you. Okay, awesome, guys. For those of you that still have any questions that I might not have addressed, feel free to email me at support@theotrade.com. Attention, Tony. Roderick, no, it's just going to be Monday as a follow-up for the class, because I know we're going to have a lot of new folks that are going to be joining us for their free week at Theo. So I want to be there for them, so we can kind of, while it's fresh in our brain, we can do the open, and then I'll still be on for my afternoon session. So we'll be doing a double session on Monday. Awesome, Stephen. Thanks. Welcome. Thanks, Jim. Thanks, Billy. I'm going to shut it off now, guys. We're about 17 minutes over. So again, really appreciate the feedback. I know it's a lot to take in. Rewatch it. There's plenty of, I believe the video will be on the page by the end of the day. Jeff's really good about that. So everyone have a fantastic weekend. One more question from Clayton. Oh, okay. All right, that wasn't a question. All right, hey, Hoff, how are you doing? You got to be. All right, guys, see you all on Monday. You all have your weekly pivot. We'll post the weekly pivot for ES and crude on Monday morning pre-open, or I'm sure Carl will probably post it up before then. All right, guys, everyone, have a fantastic weekend. See you guys later.